NASDAQ. This is a trade recap of July 23rd, 2026, but before I get into the trade recap, I have some things I have to say. I've been trading for 3, 4, maybe 5 months, and the month of July has been the worst price action I've ever seen. And I hate to blame price action because I haven't been taking the best trades, but what is this? Now, before I get into this, I need to say some things about NASDAQ. I'm going to grab NASDAQ by its balls and throw it off of a cliff. Why are we running to TP, running to break even, chopping around, and then running to full TP? Tell me, NASDAQ. Tell me. It hurts. I can't catch a break from NASDAQ. It's just... NASDAQ is spanking me right now. But let's get into the trade recap before I close my laptop. Let's get into it. On the daily time frame, same idea, right? We've been stuck in this range for the past like 3 weeks, and it's been so annoying. But the most recent range that we've been in was this range here. And yesterday we perfectly hit 50% of that range. We were reacting off of a daily fair value gap, expecting distribution lower, at least maybe to this low or to this low down here, right? On the 4-hour, we have this market maker sell model right here. Obviously, market maker sell models are completed whenever you take out the low that starts it. So I'm obviously bearish towards this low here. On the hourly, there wasn't any Judas swing for value gaps that I could see. Only problem with taking shorts today is that we have a bunch of higher time frame low resistance here that I really do not like, but we dumped right before that. We opened up a few 30-minute fair value gaps before in pre-market that I wanted to see, get a 930 manipulation higher, then get like a 1-minute inverse, and then trade back lower down to 930. So we had these two 30-minute gaps that we had. And what happens at 930? Well, 930 manipulates lower instantly, not sweeping out any type of liquidity pool, but still a manipulation lower, leaving behind a 930 wick, right? We have some pre-market accumulation. We open up, manipulate lower, then we manipulate higher, right? Into our higher time frame PD rays being these 30-minute fair value gaps, this 30-minute and this 30-minute being those lines, right? And now as soon as we manipulate into that second 30-minute, we instantly get a rejection with a 1-minute inversion to the downside, right? Right here we have this strong bullish move, and then we get the bearish move closing beneath it, right? So we get that IFG, that's where I'm entering. Now as far as break even, we had an unfilled 5-minute here with the devil's mark that I knew for sure was going to get retested, and we also had this unfilled 5-minute here. So that devil's mark and the unfilled 5-minute was my break even. We hit it in the first candlestick, break even instantly. And then we run, right? We run to this second unfilled 5-minute, and that's kind of what sent the rejection higher that stopped me in break even. Now, why did I go break even at this 5-minute? Well, because it's an agreed upon DOL. Now, what is an agreed upon DOL? An agreed upon DOL, draw on liquidity, is a draw on liquidity that should get hit no matter if we are bullish or bearish. So, for example, if we are going to be bearish, we should react out of these 30-minute fair value gaps and then go and hit that 5-minute fair value gap and run through it. Now, if we were going to be bullish and there was some major liquidity above, we should hit this 5-minute fair value gap to then continue higher. So either way, it's going to get hit in any scenario, bullish or bearish. So that's an agreed upon DOL, meaning it's a strong break-even point, and you should enter the trade with the hope that it'll run through it, which did happen, right? Now, I've been kind of stuck on eval gel, to be honest. So realistically, if I was doing better on my eval, I would have just chased a 1-to-1, right? 1-to-1 would have been hit in about 2 minutes. Or maybe I would have chased this second draw for a 1 to 1.5, right? Shoulda, woulda, coulda, right? But I've been struggling on this eval, so I went for a 1 to 3, targeting the 930 wick, right? Stops at the swing high, or this is a very protected high because we're inside of a 30-minute, 2 30 minutes, 1 minute inverse to the downside. And now, one thing I wanted to make sure with this trade is that ES is also in a place to distribute. Now, what does that mean? Well, I need to make sure that ES is also in a higher time frame PD array, being the same 30-minute for value gap. So I know that when price is up here with ES, we are gonna have a protected high as well on ES. Since the two markets are correlated, ES and NQ, I know that if ES is gonna go down, then so is NASDAQ, right? Actually, this looks a whole lot better on ES. Let's see. If I chase the 1 to 3. Where's 1 to 3 at? Okay, yeah, so ES looked a lot better because ES would have hit take profit, but this move up is what caused me to get stopped out on NASDAQ because, of course, NASDAQ is a lot more volatile than ES. So, but what I was saying though is I want ES and NASDAQ to be in a place of distribution. So it's literally a textbook setup. We got our accumulation zone right here. We get our manipulation into a higher time frame PD array. Then we're expecting distribution with the inversion with the Paddy swing, I guess, pre-distribution inversion, PDI. I mean, higher time frame narrative hitting 50% of the range yesterday. Like, there's no reason for us to go higher after this point. So yeah, I got stopped break even here. Why did I go break even? Agreed upon DOL, right? And I got stopped, and we proceeded to run to full TP, targeting this 930 wick, and we instantly got a rejection out of it. But what is this New York AM session? Why are we chopping around in the most volatile part of the day? I have no clue. But again, I don't like to blame price action, but this has been horrible. But yeah, that's the trade recap today of July 23rd, 2026. Peace.